Folks, welcome back to yet another crypto report. My name is Hamilton, here with the Trading Initiative with my co-host here, Josh. What's up, Josh?
Good morning. How's it going? Is the Bitcoin bottom in? That's what I'm going to ask.
Well, I'm glad that we got the technical difficulties figured out. And that's exactly what we're going to talk about today. So without further ado, I think the biggest kind of pressing issue that I have here is that the TradFi markets are coming off of arguably one of the worst weeks in the last, at least this decade. I think this is the fifth fastest 10% correction in history or something like that. Just absolutely mind-blowing. Bitcoin actually held in there. So kind of the first thing I want to talk about is there something here? Is there some underlying strength here that we should be focusing on? And in the bigger picture here with like this risk hierarchy, is Bitcoin hanging in there a bullish signal for the TradFi market? What do you think?
I mean, we're in the pocket and we're holding on. I think one thing we wrote about this week is whether people see Bitcoin as a leading or lagging asset, or if it's diverging altogether from equities drawdown this week, like you said, the biggest or the fifth fastest. Given the nature of it being a risk-on asset and a high correlation to IWM, I would have to tend to lead in the current markets to leading. We looked at the ratio between Bitcoin and the Qs, Bitcoin IWM. We saw that it did lead that drawdown against IWM, against the Qs. However, in tandem with IWM, and it did have, as one of the TTM members pointed out, a bullish divergence on both those charts to the upside. So, I like to be in the favor of Bitcoin has bottomed on this kind of correction and drawdown, and it would make sense. A lot of folks, including the both of us, said, hey, if it gets down to 70, 72, 74, we're buyers. That was kind of the consensus across most traders in this space. How often are consensus traders correct?
I mean, listen, I think it comes down to this. Is Bitcoin and crypto in general a leading indicator, or is it a lagging indicator? And if you think about what Bitcoin Bitcoin is essentially a leveraged Qs play. It's a high beta asset. It's an opportunity to trade kind of that growth narrative with way more volatility, and obviously as traders, volatility tends to be a pretty good thing for most of us, at least. And so thinking about, this is a liquidity play. This tends to track kind of that growth narrative. The Qs for sure, it's essentially a levered Qs play. It doesn't surprise me to see Bitcoin break down first and kind of lead the way to the downside, which it did, right? Bitcoin broke below it's kind of that support level that it had ranged in for a couple of months, like that 90K range. We plunged through it, came all the way down in towards the upper 70s. All hell broke loose. This is the end of the motherfucking bull run, according to everybody. You know how people get. I'm not lying. It doesn't feel good being long this asset class when prices are coming down. I should specifically point out Bitcoin in general. Asset class in general has been hammered, so I get it. But from a primary trend standpoint, BTC is still up. And so it doesn't surprise me from this risk hierarchy understanding where Bitcoin and crypto in general probably going to be higher on that risk hierarchy, meaning it's riskier to trade these areas of the market. It doesn't surprise me to see this lead to the downside. And here's kind of the big thing I'm looking at here is we're not going down anymore. I mean, it's not to say we're coming up. I don't want to sit here and say that this is the best thing ever, but we have some positive momentum coming in on the daily. There's a lot of people out there in crypto land that are coming down into the 1 hour and 4 hour charts that are normally pretty rational traders on the daily and weekly. And I'm going to tell you something from my personal experience. When you get swing traders looking at hourly charts, it's generally not for a good reason. They're generally looking for evidence. It's a little bit of maybe confirmation bias. Sticking to the daily here, we do have a bullish divergence now starting to play out where we have increased momentum off of the lows. Price is hitting lower lows, whereas the RSI is not. We like that. That's kind of stage one. Even in the TradFi market, by the way, all these questions, when do we think the market's going to bottom? Listen, I don't fucking know when the market's going to bottom, more than anybody else. But there are signs that typically show up. And one of those is a bullish divergence in momentum. It's typically a leading indicator that maybe something might be forming there. Bitcoin has that. We're back up and over the 200-day moving average as of right now. Is it a surprise to see the TradFi market kind of consolidate over the last 2 days, 3 days as Bitcoin is consolidating over the last week? I don't think it's an accident whatsoever. What do you think? Do you think we break back up at over 90K within the next week or two? And if we do, are we buyers again, or are we waiting for the all-time high break above like 103, 104? Do you think that we're sending this back down to 70? Where's your head at here, giving weight of all the evidence?
Yeah, I mean, to be honest, I'm not sure if we get back above 90 this week. We've talked about this for multiple weeks in a row. Bitcoin's had nonstop bullish news, and it hasn't reflected in the price action. I don't see why we couldn't make it up there, but I think it might take some more time. It might be a slower grind back above 90. For me, I'm not going to be considering, any long swing trades or longer positions until we're back above kind of that 96 level, where we kind of had a mini range inside of the broader range where Bitcoin went sideways within, $100 for 8 days straight, closing those candles. So I want to see some positive price momentum above that area. And then once again, if we get that all-time high break, that will be a sign to load up the bags again and get risk on and heavily long. But
I mean, I'm there with you. Like my line in the sand, we're in no man's land right now, right? Once again, if you're down into the trenches, you're a swing trader, you're a position trader, and you're coming down into the hourly chart, the 4-hourly chart, you're in the trenches, man. Like, you're looking for a reason to be bullish, which is fine, whatever. But that's confirmation bias 101. And as long as you understand that, if you're doing that, great. For us, we want to stick to the daily. And there are some constructive things here on the daily chart. Having said that, we're still in no man's land, right? I think above 90K, I'm a willing buyer again. I have a position, a large position that I opened up off of the 70K breakout, just a very normal previous cycle high breakout into a new cyclical high. I'm pretty sure everybody that's listening to this has that entry as well. Hopefully you're defending that. But having said that, we're in no man's land here. Below 90 and above 70 is just kind of chop zone. It could go higher, it could go lower. There's obviously supporting evidence that maybe we will go higher over the next week or two. But that's supporting evidence. At the end of the day, price is the only thing that pays. And so we're going to be looking for a move above 90 to confirm our bullish thesis. I think above 90, 91, 92, I'm nibbling. Above 103, I'm max long again into a new all-time high. End of the story is we're trading above an upward sloping 200-day moving average. I know how scary everything feels, but the slope of a moving average, like the 200-day moving average, matters more to me than what people's opinions are. And as long as this is sloped up and price is up and over it, I think the primary trend is up, and I want to be a buyer.
I couldn't agree more.
Let's move really quick to total crypto market cap. This is a big one. Along with Bitcoin being up and over 90K, I want to see total crypto market cap up and over 3 trillion. That's kind of my line in the sand here. It was my line in the sand to get really long the crypto space when we originally broke out back in November. And then we kind of stalled out. I think that 3 trillion risk on mentality has worked in the past. It's kept us out of buying dips and assets that are really coming down here. Up and over 3 trillion again, I think it's game time. And I do think before the cyclical side, the cyclical bull market is over, we're going to see a 4 or 5 or potentially $6 trillion market cap. Is this important to you? Do you think that it's important to wait to buy stuff until we see positive momentum in the total crypto market cap? Do you think it's important to see liquidity coming back into the space?
Yes and no. I think it depends on your time frame and what kind of buyer you are. I think if you're looking to be buying altcoins that are much farther down the risk scale, trying to buy them in correlation to Bitcoin's strength, assuming Bitcoin's above its 200-day moving average, it's entering those areas where we feel more confident in price action, then using total doesn't necessarily make sense to you, because you can get significantly larger returns. But for the most part, and for call it 90% of folks invested in the crypto space, it does make sense to kind of see that sectoral shift and the liquidity come back in to move above.
So what would you use? So if total's not, would you use total 3? What are we looking at here? What would you use?
Well, so I think it depends on what you're looking at. I think a combination of Bitcoin, total, and others. Others is largely all crypto assets outside of the top 10, to get a better understanding of the liquidity and kind of risk-on nature of the altcoin market.
So here's others, and it looks funky when it's on line chart, but I promise you on a candlestick chart it looks okay. So we'll bring these levels down so it doesn't look funky on a line chart. But why does others, in your opinion, matter? Why excluding the top 10 cryptocurrencies? Why is this a big deal, and what does it mean when we're back up and over this, $455 billion mark?
Yeah, I mean, I think there's a couple points here. One, others, largely the altcoin space as a whole, has not broken to a new all-time high this bull market. Bitcoin has run from 15,000 to the peak at 107,000, while altcoins have failed, most of them, to make new all-time highs, nevertheless new multi-year highs. And so when we get above 450 here, that's when you're going to start hearing.
Is that when you see alt season? Is that what it is?
That might just be it, right? But this is a better indicator of where liquidity is. And the second part to that is, and we've talked about it on the show countless times, is with things like U.S. investors having the opportunity to invest in Bitcoin and Ethereum through spot ETFs, a lot of the passive flows are continually being moved into Bitcoin. And as a result, the rest of the market is seeing less liquidity. We used to have this wealth trickle-down effect in previous cycles where as Bitcoin runs up, folks take profit, roll it into higher risk assets, large caps, medium caps, micro caps, and so on. And that is kind of how we saw the explosion of altcoins moving through the market cap chart. We're not seeing that as much so far, just given that we haven't even seen others break to new all-time high, but a lot of that money is locked up in ETFs as an example, or other assets, FTX blow up, waiting for accreditations there at the notional value when it happened back in the day in 2022. So I think two key aspects is if you want to go long alts, you need to watch for this to, at least as of right now, break above about 248 billion. We're back in that range that we really got stuck in late 2024 before the November explosion. So we want to see it break above that area and then grind its way above 450 billion.
This is really interesting to me, by the way. Really interesting, the fact that altcoins never even got going. I mean, there were pockets, right? But from a cyclical standpoint, altcoins haven't even started their run yet.
Exactly. And, when you look at charts like Total 2 and Total 3, you say, oh, well, what are you talking about, Josh? Of course they are. There was new all-time highs made. And of course, like you said, there was pockets of disruption, and it was a crypto asset picker's market where if you could pick the right one, you could put in incredible gains, whether that's meme coins or other assets like Hyperliquid that did a 35x from its ICO just a few months back. But largely all those gains were felt in the market caps of the top 10, right? You had XRP exploding, going 600% in a month, going from 55 cents to $3.15. You had Solana.
How much of this was because of those passive ETFs, do you think?
It's hard to say, right? We have to understand that the market environment that this bull market started in is significantly different than that of previous cycles, whether 2020, 2016, 2017, or previous cycles. There is a lot less liquidity in the market, which is evidently very clear from looking at global M2 money supply, as well as just understanding that times are tougher. People don't have the discretionary funds to be YOLOing, $10,000 into some altcoin when rent's high. For those in the U.S., eggs are high.
All right. We're moving off this. I don't want to listen, if you're a crypto trader, there's no such thing as discretionary trading. You're going to roll the dice on any shit ticker that fucking crawls across your screen. But I do think, though, that it's incredible that the top 10 coins really made that first push and the rest of the market really didn't. But I have Total 3 up. Argue all you want. I wouldn't really consider this a stick of a new high. I would say probably this was a retest of the previous cycle high. I do think that if there's a time to own things outside of particularly Bitcoin, it's when this particular ratio, this line, is going up. And there's an opportunity for it to potentially retest those mid-2024 highs and bounce here. I would be actively looking. I mean, I think, so what we're trying to do here is build like this thesis, this puzzle. The first piece is that Bitcoin's not going down, at least over the last couple of days. It's not. We're building some bullish momentum. We can see that in the RSI, et cetera. So that's like step number one. And by the way, that's a very distant step number one. It's not buy everything under the sun. It's just, hey, this is different than what we would normally expect. So let's keep this in the back of our mind. Number two is the fact that we do see some of these altcoin proxies like Total 3 and Total 2 and stuff like that. We're starting to pull back into some support levels potentially that might give us an opportunity to expect a bounce. And if we do get a bounce here and we start heading it back up towards 1 trillion, which I don't know if we will or not, I think it's too early, but if we do start to make this bounce in that turn, I do think that with Bitcoin staying relatively stable and this particular chart bouncing and moving up and to the right, that should give juice to the altcoin space. That should signal that liquidity and risk is flowing back onto the lower market cap values, right?
Absolutely, and it was interesting to watch as well that when Bitcoin was having those back-to-back 5% days, in those latter days when we started breaking down below 80,000, altcoins weren't responding as they have over the last several months. Typically, when you see a down Bitcoin day, 5%, you're looking at altcoins down 10, 15, 20%. But on those days, we saw most altcoins with red P&Ls less than that of Bitcoin. So whether that's sellers running out of coins because all they've been doing is selling for the last few months, or if we're starting to see what you just talked about, we're coming back into those support levels for kind of those key tracking indexes, Ethers, Total 3, Total 2, and now folks, don't have that appetite to sell those assets at the valuations they are. A lot of altcoins are at their bear market lows, and so folks at this point potentially aren't selling, but that's a good sign for this reversal here we're seeing in Bitcoin, which we're looking at about to touch 85,000 now, and altcoins are responding favorably to that.
Let's move in really quick. I don't want to spend too much time on the altcoin space right now because while maybe not Ethereum, there are some bounces across the space. I think right now all eyes have to be on Bitcoin. But I just want to point something out here to anybody that is either they own Ethereum or they're trading Ethereum. There's this old adage in the markets that nothing good happens below the 200-day moving average. Mr. Paul Tudor Jones told us that, and for the most part, if you live by that rule, you'll survive a market that might take a pretty nasty turn to the downside. It doesn't necessarily time stuff, but Ethereum, for whatever reason, has just not responded well during this entire cycle. I mean, going back to the middle of 2023 when things really started to get going for us, I think our first position in Bitcoin was October of 2023. Ethereum obviously made a jump too, but just consistently underperforming Bitcoin. And then for the last year has just shit the bed. It's just not an asset that has rewarded its investors or traders whatsoever, unless you're trading it on a relatively small time frame. And now you have new 52-week lows coming in on Ethereum. And I think that's important because over the last year, this $2,000 area has acted as support. Reasonable to expect that as long as we're above 2K, that maybe the path of least resistance is still higher. I don't think that's the case anymore. I think Ethereum is completely risk off. I don't like it. I actually hate it. I think there's so many better assets out there, and it sucks because Ethereum was a big moneymaker from 2017 through 2018, at least 2016 to 2018. 2017. I think it was 2017 to 2018. Huge moneymaker and obviously the second most important crypto. But why? Why would you own this asset below the 200-day moving average at 52-week lows when you could own other things that are showing relative strength? Is there any argument to be made to own this?
Honestly, I mean, ETH maxis would say yes. Things like, staked Ethereum ETFs going live and expected to go live this year. So potentially money funneling into there, either out of Bitcoin ETFs or fresh money flowing in to get that essentially dividend payout to make that asset and that public vehicle more appealing. But no, I mean, not only is Ethereum below its 200-day moving average, it's below its 200-week moving average.
Yeah, I mean, this is terrible. As soon
yeah.
as somebody starts talking about, I want to own this for the dividend, that they, I'm not going to say they don't know what they're doing. Maybe they're building a portfolio, like an income-driven portfolio where dividends matter. Most people that are trading are not doing that. So if you're holding Ethereum because I'm going to get a dividend, you're probably down bad. And at this point, you're like, I might as well not even sell. And now you're like picking through the shit to try to find something to justify why you're still holding it. Dividends or whatever the equivalent is in crypto is probably part of that. Okay, so Ethereum, I think at this point, there's no point in owning. There hasn't been a point in owning it in a long time. I just want to flip through Solana really quick because Solana was a big mover for us. It was my biggest winner of the last cycle. What do you say here that we're bouncing at the same levels? Just like it's the exact same chart as Ethereum, except Solana has just consistently outperformed at every single friggin' turn. Solana finding support once again at the 120 level and bouncing. Do you buy this bounce with anticipation of a 260 retest over the next couple of months? Or do you stay away from it?
I wrote to the TTI team on our platform last night that I personally think this is a buy. If you can get an entry between 120 and 130, posted yesterday, this makes sense. This is the 8th or 9th time that Solana has held this support level. And given the bounce we've seen on Bitcoin, potentially a lower high put in if we're looking kind of very carefully at the daily on Bitcoin. If you are in the mindset that we've been talking about of Bitcoin being that leading asset when we're talking about market movements, then this is the ideal time with a very easy risk-off area on Solana to
That's it
take
right
that
there.
long.
This is a beautiful trade. It's not that it's going to work, right? Obviously, we can't say this is going to work 100%. Legally can't say that. And also, if you have more than 2 IQ points, you know that nothing is 100% in the markets, except that you're going to fucking lose sometimes and pay some taxes. That shit sucks, but it is what it is. The one thing that I love about Solana, so tight to the entry that the risk to reward is friggin' huge if it works, right? Your stop is somewhere below the swing low here at like 112. So if you're in at 130, you stop somewhere below range low at 112. Give it, don't put exactly to the penny because you know how crypto markets work. They love to wick people out. And you have some interim price targets, 200-day moving average, probably the first one to target. Take a little bit off there. Get up and over the 786 fib. Maybe take a little bit off there. And then you got the 260, which is obviously the all-time high. And if we get up there and start to break out, you might want to think about potentially adding a little bit more in for that next cycle high. But like you said, the stop is tight, and so you juice that risk to reward like crazy. I think this is like a no-brainer. You don't even have to like Solana. You don't even have to like crypto. That you have a clear risk level. You have a stop out right underneath it, and you have a bunch of space to the upside that historically price likes to gravitate towards. Why would you not throw a couple bucks at this, right?
And if you're one of those folks who needs something to kind of look towards a bullish catalyst of sorts, there is news breaking over the last few days. The SEC is acknowledging Solana spot ETS. So whether that goes through this year, next year, or doesn't go through at all, I think that's a factor to consider when others are looking at the market as a potential bullish catalyst.
Yep. Also, SBF got interviewed in prison. That's a good catalyst as well. Why not? All right, let's keep moving.
Instantly went to solitary confinement. Breaking rules.
It was worth it.
Incredible.
Let's talk Ripple really quick. Let's use a different chart here. Let's go to, I don't remember what I charted it on. Binance? Was it Binance? There we go. I'm going to delete this. It was a good trade at the time, but it doesn't make sense now. So here we have Ripple. We're consolidating in between two fib extensions here at the 268 and the 168. I love this. Unfortunately, it reminds me of Bitcoin, though, where we're in no man's land. I think this is a long above 2.8. I think this is a long at 184. Might be a short if you like shorting. I don't want to short Ripple. I think that's an easy way to blow up in your face overnight when you're sleeping. But I like either adding here above 2.8 or a retest near 184, 185. What do you think?
Yeah, I couldn't agree more. I would be looking probably, get long around between 270, 280, just depending on how the market is trading at any given time, given it's a 24-hour market. And, I would probably look to have my bids laddered on the bottom half of the range from about 215 down to where you said 184, just because you never know how far you're actually going to get that wick down. So if you're, depending on the position sizing you're looking for, that might be the best bet. But I agree. XRP has been extremely strong since the announcement and since November, and I don't think there's any reason or rationale to bet against this when markets are trending.
Every single name that we've looked at, by the way, they're all obviously larger market cap. Every single one of them is posting a bullish divergence. Once again, guys, if you're listening to this, don't take bullish divergence as like the voice of God. It's just it's a side piece. It's supporting evidence. Seen this a lot over the last 2 weeks as Bitcoin has come down. There's a lot of people that are digging into the bullish divergences on the 1 hour and stuff. Folks, that's not enough. That's just not enough. It's supporting evidence. You need price to confirm this. But what I will say is if you're looking for a reversal in an asset, typically the first thing you're going to notice is a bullish momentum divergence, right? And what we're seeing here is bullish divergences play out on the RSI on basically every single one of these larger market caps, which is great. I mean, I want it, right? I mean, personally, as an asset owner of a bunch of these, I want these things going up. So it's encouraging to see. Like Ripple, like where your head's at. Last one I want to talk to really quick is BNB, because this was, for a long time, kind of the picture perfect setup, and yet it head faked everybody out again. So for the third time getting up and over that 670 area and unable to stick it. What do you think here? Is there a positive catalyst? Should we still be wasting our time? I mean, this is dunked on me 3 times in a row.
Yeah, I mean, positive catalyst. It came out yesterday that allegedly, and
air quotes here. Just one of the air quotes.
Yeah. Well, sorry. I mean, this is from sources that the Trump family is looking to take a stake in Binance. So, if the sitting U.S. president's family just ends up buying a part of Binance, I would probably say that BNB is worth longing again once that risk on appetite comes back and it reaches those levels you want.
So what level? 670, right? I mean, we still got it like that's it.
So, I mean, 670, or I would even potentially move it up to 725. We don't want to keep getting faked out. You could take a nibble at 670 and then add into the full position up there when it's actually breaking all-time highs again. The question is always how much juice does it have left? We know BNB coin is one of the most highly manipulated coins, just given the exchange it comes from. But it's worth the long. Just keep in consideration that it's not available on a lot of exchanges. So, liquidity, while deep, is limited to where you can actually trade it and how deep the liquidity is on non-Binance exchanges.
This all comes back to total 3, right? Solana, Ripple, BNB, they're added into this total 3. This bounces here.
Yep.
I think you got it. I think you got to look at these as short-term trades to the upside minimum. If they turn into something bigger, great. You have a foothold you can add in. It's way easier to hold into a winning trade than it is to establish a new position in an uptrend. So these key pivot points give us an opportunity to kind of establish that anchor position, add into strength if it occurs. And it all comes down to Bitcoin and this total 3 chart. If BTC continues to base here, which it looks like it is, and bigger question, does this front run the TradFi market? I think it's worth an opportunity here on some of these coins to add some exposure here. Like I said, keep tight stops. We have levels to risk off of. It's not no man's land unless you're looking at Bitcoin here, but we have a level on Solana, tight stop. We have 2 levels on Ripple that we can utilize to get in. We have a level on BNB as well. I think it's worth an opportunity. This is the most optimistic I've been in the last 3-4 weeks in the crypto space. I'm not looking to establish full positions at all, but I'm willing to nibble for the first time in a couple weeks.
Yeah, absolutely. It's been a relatively hard few weeks, and I wanted to point out too, even over the last several years in this crypto bull market, if for those who think the bull market has started versus those who haven't, swing trading has been tough. I mean, the reality is you're holding a position for a week, it's going well, it's going in your favor, and then one day, price action goes against you and you're stopped there on a 20% down day. So, from what I've seen on crypto Twitter, as well as even, the portfolios I've been trading, is that, swing trading has been difficult. It really, due to the volatility, it really has been, a day trader's market or a scalper's market. And so hopefully with this bounce and reversal, and if we do get a continuation of the primary trends across Bitcoin and crypto markets as a whole, we start to see that kind of volatility allow swing traders to stay in their positions and kind of move with the trends as potentially altcoins catch up to Bitcoin's price action over the last 2 years and start to have some fun.
One thing I'm going to add there, because I don't disagree with you, particularly in the TradFi market over the last couple of days or potentially weeks here, it's definitely been a day trader's market, which is great. For day traders, not for me, but for day traders, it's been great. One thing you could do as a swing trader, a position trader, or somebody that's just looking to have longer term positions on the books is that during periods of high volatility, the way to attack that is not to run tight stops. It's actually to run wider stops, which is counterintuitive. Most people want to keep their stops super tight and get out if price moves against you. But it's counterintuitive. The more volatile an asset is, you need to give it room to breathe. So you need to have wider stops and allow this kind of trade to work itself out. The way you combat that is not by manipulating a stop. It's by lowering your position size, right? So by giving up a larger stop, if you let's say you normally have a $10,000 position on and your stop is generally, 10% or whatever it is, and you're willing to lose $1,000, widen that stop out to 20%. If you're not willing to lose $2,000, which is totally fine, lower your position size down from 10 to 5. It's just that simple. That's the way you play higher volatility. So if you're looking at these crypto assets and you're thinking like, shit, this is really volatile, I want this, but it's super volatile, once again, widen your stop out. Some great tools to use, by the way. Average true range, ATR. You can find indicators on TradingView if you don't know what it is. It'll show you the volatility bands. You can use what we use, average daily range, ADR. You want some sort of viewpoint into volatility, widen those stops out, lower that position size a little bit, and then when you actually stick the breakout and you see that the trends are back, you can very easily add into winning trades. Once again, way easier to add in to trades that you're already in that are winning than it is to chase price higher with no position in, because you know as soon as you get in, what happens? Fucking market dumps on you, and you feel like an asshole, and you stop out, and then a week later, price is right back up to where you were, and you're mad. And so try to get these positions anchored in at specific areas of the chart that make you feel comfortable, with a little bit wider stops, a little bit smaller position sizes. Add in over time.
Exactly. I think that's one thing that when we're writing about crypto or trade specifically in the crypto market in TTI, we look at the ADR, and the reality is the ADR in crypto for most assets, especially things not inclusive of the majors, is 9 to 20%. So you're really trying to figure out what that sweet spot is for your stop at, looking at like a 1.2 to 1.5 ADR area to stop. And as a result, you need to lower your position size so you're not getting blown out.
I mean, look at this thing. Trades. Bitcoin moves on average 6.58% intraday. That's fucking insane. And its ATR is $5,000. So if you're running like a $500 stop, you're going to get murked intraday. You're not going to have a batter's chance at all trying to swing trade this stuff with super tight stops. It's just not the type of market to do stuff like that. So, okay, I know that we've taken up enough of your time. It's been about 30 minutes. Josh, any parting words?
Stay long or get long when the markets make sense, but it's okay to be in capital preservation mode, and people will joke about being sidelined. It's worked. It has worked for the last several weeks to be sidelined while markets dip, and you're not catching knives. So continue to be a rational, logical thinker, even though as hard as that is in the crypto markets, and you're going to do just fine.
Listen, there's only two people in the world that don't like sitting in cash. That's liars and marketers, and people that don't have a lot of money, and so they feel like they need to be vested 24/7. It's not popular on Twitter or any social media platform to say cash is a position, let's just wait. Sub-sellers want people to click on their links and pay them money to get into garbage positions. We're never going to do that. Sitting in the side and waiting for a clear setup is always the way to go. Josh, appreciate your time. Thank you so much. Happy Friday, folks.
Thank you.
We'll catch you next Friday in our next crypto report. If you have any questions regarding anything, Josh,